Jay, I want to draw back to when you raised the price target on Apple earlier in this month. You talked a lot about what you saw here as a company doing the right thing in a challenging cost environment with regards to getting access to memory, doubling down on the hardware that they have. Based on what you see in these numbers from the quarter that just passed, and based on your expectations about what we might hear from them for the quarter going forward, are they in good shape?
So the quarter looks really good, above expectations in almost every metric. The big question now for the guide will be what their gross margins look like. Every consumer-facing, basically every company that's not doing something with AI, so it's consumer, enterprise, electronics, are facing severe margin pressure because of the surge in memory prices. Apple is one of the biggest buyers of memory out there, and I suspect it's going to have take some toll on their gross margins. But I think strategically it's a good move for them, and so they can displace that. But that's what I'm going to be focused on for the guide.
I am curious, too, particularly when it comes to the margins, and at least for the most recent quarter. Again, those margins were relatively in line with estimates, up 22% to $54.78 billion on the gross margin side. And obviously, it's still a cash juggernaut with $45.6 billion in cash and cash equivalents out there, Jay. Do we expect any sort of hit to margins going forward? Are you modeling that into your forecast?
Every other company in the space is experiencing something. And based on the things I'm hearing about Apple's behavior in the marketplace around memory, I think it's pretty likely. I think it would be smart for them to guide that way. Memory prices have tripled in this year or in the last year, and so it has to have an impact. So my hope is that they'll get out in front of it and talk about it and explain why it's what they're doing is the smart move here.
And I mean, do you agree that this is the smart move, the strategy that they are taking to memory? I mean, again, you make the point that you take a look at prices. They've just gone nuts in the past year or so. I mean, the way that management has handled this up to this point, what grade would you give them?
I think it's an A, possibly an A+. I think they're being strategically very smart what they're doing. They're buying up all the memory they can to ensure that they don't run out. Other people are going to run out of memory. And that's going to put a lot of pressure on their competitors who won't be able to get the same memory. They're going to have to pay up for it. Apple has a big advantage in that they can monetize customers through their services division, right? My estimate, it takes about 9 months. You sort of factor in the memory prices, they can recoup that extra cost in about 9 months on services margins, right? Most of their smartphone competitors can't do that. Their PC competitors can't do that. And so now is a good time to push for share and expand their reach.
Let's talk specifically about smartphones a little bit more, because we were having the conversation with Mark Gurman that probably will be the dominant form factor for the next several years to come. But we know that there's a lot of talk, potentially anticipation about a foldable iPhone. I mean, do you think at this point that would be a needle mover for Apple?
I expect it to be a pretty incredible phone. I held off upgrading last year because I want to get the Fold this year. So Apple has a pretty good track record on making good products, and so I think the Fold will be compelling. And I think for investors it'll be interesting because it's going to be a high price point. Like I don't know what it is, but it's probably going to be $1,500, $2,000 phone.
Oof. Oh,
and
wow.
it's expensive, but there will be lots of people, including myself, who will line up to buy it, and that will sort of help ease some of those margin pressures.